global business insolvencies will continue to decrease in 2015, falling by 4%. However, we might also remember this year as a turning point because of a new divergent pattern between advanced economies and emerging markets. This new dynamic will continue to shape next year and consequently will interrupt the continued decline in insolvencies that we observed since the global financial crisis of 2009. The main game changer is the turmoil affecting emerging markets. You can blame the slowdown in Chinese growth, the fall in commodity prices, the sharp depreciation of local currencies, and the looming Fed's interest rate hike. Add to that the recession in Brazil and in Russia, and you get quite a gloomy outlook. This is why we expect a growing number of companies to become squeezed between slowing or lower revenues and higher costs, pointing to further competition, new pressure on profitability, and additional needs for financing. And this raises concerns about a possible vicious circle with more delays in payments and with private debt issues. In this cloudy environment, the sharp rebound in insolvencies already registered in emerging markets for this year will strengthen next year, especially in China and in Brazil. This will lead to a surge in insolvencies of 10% in Asia and 14% in Latin America. The situation looks more favorable for the advanced economies, with a steady decline in insolvencies of around 10% this year for both North America and Western Europe, and with also insolvencies down to low levels in some countries such as the US, UK, or Germany. However, other countries like Italy or France are struggling to significantly lower the level of insolvencies, while some sectors such as construction remain more at risk of bankruptcies. But even more importantly, the overall improvement in the advanced economies is expected to lose momentum next year, while corporates will still have to overcome with low global economic growth, high debt levels, deflationary pressures, disruptions, and business demography dynamics. Overall, after declining steadily since 2009, we expect worldwide insolvencies to stop decreasing next year, and thus to remain above the pre-crisis levels, with 1 out of 2 countries still registering an increase in insolvencies. A good reason to stay tuned and continue to monitor pockets of risks with Euler Hermes.